What's going on, guys? So today I'm back with another lesson, and today I'm going to be going over the model that has completely changed my entire trading career. This model has completely flipped around how I trade, completely changed exactly how I trade to this day. So let's get into the model and what you need to know before we get into the actual mechanical part of the model, right? So, first, what we need to know if we're trading the forever model is we need to have a strong draw on liquidity, right? Because if we don't know where price wants to go, if we don't have a strong bias, a strong draw on liquidity, then you don't even there's no reason to even trade because you're just gambling at this point. You're just guessing, right? Let me fix that. Right? So first thing you want is a strong draw on liquidity. Second thing that you want when you're trading the forever model is you want to look for PD arrays or imbalances in the market, right? So look for PD arrays in the market, or let's go slash imbalances in the market. All right, cool. Right. So PD arrays or imbalances like fair value gaps and stuff like that, those are a key factor in the trade setup. That is the start of my model. That is the start of how. That's like when I see a PD array in the market, that's when I know to start looking for my model once we tag into that, right? So after we find our PD arrays in the market, right, what we want to do is wait for price to tag into that PD arrays. So wait for price to tag PD array. Then look for SMT, right? So SMT is also a very important confluence in my model because when I see SMT, it tells me that the market is ready to, well, not ready, but the market could start to flip direction, right? So I like having SMT in my a part of my model, a part of one of my confluences, because it's a good indicator for me to tell when the market wants to move, right? So after SMT, what I'm looking for is for price to invert a correlated. So I want to see price invert a fair value gap that is correlated with the PD array that it tagged into, right? So I'm gonna get into that in a minute. Let me type this out real quick. Correlates with the PD array time frame. And if I misspell anything, don't mind that. I've never been able to spell for shit, so y'all probably gonna hear me sounding words out and shit. Don't mind it. So once we have our SMT and we tagged into our PD array that give us our SMT, what we then want to look for is dive down into the lower time frame. So for me, I mainly use 15-minute fair value gaps and 1 hour fair value gaps. So say price tags into a 15-minute fair value gap, right? What I mean when I say price inverts a correlated fair value gap with a PD array. So if I tag into a 15-minute fair value gap, the correlated time frame with the 15-minute is the 1 minute time frame. So if price tags into a 15-minute fair value gap, I would then want to see price inverse a 1 minute fair value gap, right? And same thing for the hourly. If price tags into a hourly fair value gap, the correlated time frame with the hourly is the 5-minute time frame. So I would want to see price tag into, I would want to see price invert a 5-minute fair value gap. So that is what I mean by that. And then after we get our inverted fair value gap, what I then want to see is a change in state of delivery, right? Or a breakup structure. So I will show you guys again what all these are. I'm just writing down a checklist of what you want to see in the market before you enter a trade, right? So you want to see price create a change in state of delivery or a breakup structure, and that would be your entry. That is where you would enter a trade, right? So these are the steps that you want to see before entering your trade. Now we can take this to the charts and we can go over some examples with you guys. So let's see, run the daily, taste Thursday, yes. So I'm just gonna go over an example from today, an example that I took today live in the market, because this was a very good setup, right? So coming into the day, we have price had just tagged into this daily bullish fair value gap right here, right? So price just tagged into this daily bullish fair value gap, and you guys might not be able to see it. I can see it pretty good on my screen, but it is dark, and that's how I made it so I can see other things on the chart and keep this big time rate, like this big imbalance on my screen as well. But we do have a daily bullish gap right here. You guys should know what a bullish gap is by now. So I see that, and I drop down to the 4-hour, and I'm going to play price forward. Okay, let me come back, get rid of the 6 o'clock candle. Okay, so yeah, this is where we're supposed to be. On the 4-hour, let me go to, on the 4-hour, we have a 4-hour fair value gap right here as well, right? Let me bring ES over here too. So we have a 4-hour gap here that I'm just marking out to keep a note of, right? And I'm dropping to the 1-hour now. So on the 1-hour, we at the 5. So let's go to the present time where I would be just waking up and starting to get on the markets, which would be around 8 o'clock. So 8 o'clock comes, and what do I see at 8 o'clock? Well, first, let's go and mark out our session liquidity, right? So we have London lows here, London low, and we have Asia lows here, right? And we can do the same thing on ES. Mark out our highs and lows. We have London low right there. And then we have Asia lows down here, right? So, coming into the morning, and I'm looking at this and I'm knowing that we just delivered from a daily fair value gap, a daily bullish fair value gap, and we're also at all-time highs. So I am very bullish on the day, and I'm going to be bullish until I see a high time frame breakup structure or change of state to the downside. So with that being said, coming into the morning, when I just get on the charts, what I see is we have a 1-hour gap, a 1-hour bullish fair value gap right here, right? And we have a 1-hour bullish fair value gap right here. And the same on ES. Right here. And right here. So, Coming to the morning at 8 o'clock, what I see is that we are respecting this on NQ, but on ES we have already disrespected this first fair value gap. So with that being said, and I see how close ES is to London lows, I don't really care about this gap. I can get rid of this first fair value gap because I don't expect price to respect it, and I don't care if price respects it because I'm not taking no trade until we take London lows. So with that being said, I mark out this 1 hour gap right here, and then I drop down to the 30-minute time frame, right? So and then what I do is I look for any 30-minute fair value gaps that are in this 1 hour gap, or like right above it, right? And what I see is this 30-minute right here, right? 30, mark this out, 30 minutes. So then I can now get rid of this 1 hour gap because I now have marked out a 30-minute gap, which is a lower time frame, which is where I'd rather take a trade from a 30-minute to a 3-minute than from a 1 hour to a 5-minute, right? So, tell me what time is this? 8:30. Let's go forward. Not that far forward. Fuck. Alright. So we're getting closer to market open. It's now 9 o'clock. And what do? We inverse this first fair value gap exactly how I expected to. So now what I want to see is I want to see either ES come down and take Asia and London lows and create SMT with Asia low, or I want to see us come down at NQ and take London lows and give us SMT with Asia lows, right? So I can come down to the 15-minute now, and I can look for 15-minute gaps around this area. Because why do I want to look for gaps under London lows? Well, I'm expecting price to come take London lows and then tap into a gap and push right back up, right? So I want to find the lowest time frame gap I can to enter off of, which is this 15-minute bullish fair value gap. So now I have my morning set. I know what I need to wait for the morning, right? So now all I gotta do is just sit here and wait for everything to happen how I want it to. So I come in, market opens, it's 9:40 now. What happens? 9:40 comes, ES takes out London lows and Asia lows, right? But I'm seeing on NQ, we're so close to this London low. I want to see us take London low now because we will still have SMT at Asia lows, right? So what do? We take London low and tag into this 15-minute gap. So now what I see from this is that we have made SMT with Asia low. So Asia low's all the way down here, and we didn't come close to that, right? Although ES, Asia low is the same place, and what do? We came way past Asia low. We broke way past Asia low. So that's bullish SMT. That tells me that price is now ready to go forward. So let me go back a little bit because I messed that up. So I can get rid of this now because we tagged into the other 15-minute. Now that we tagged into this 15-minute bullish fair value gap and we got a high time frame SMT on the 15-minute, now all I gotta do is look for these confluences that I showed you guys, wherever they're at up there, right? So what am I looking for? SMT, check. PD array, check. 15-minute fair value gap. PD array, check. Now what am I looking for? I want to see an inverted fair value gap, an IFVG, right? And then I want to see a change in state, right? So this right here is now my trade entry. I enter right here, stop loss at the low, right? TP at the high. Right there. This would be my TP. Now, for this trade, this is how every single trade should look. You should always put your stop loss at the low, TP at the closest, most obvious high, right? But for me, I trade a tighter stop loss. I trade 30 points, right? So my stop here today was right here, and this is the exact trade I took today, but I got stopped out on profit, so I made around $400 today. But this is the exact trade I took today. I keep a tight stop loss. I keep a 30-point stop loss because I just, that's just me. I'm just picky, right? So this was the trade I took today, and what you want to see is an inverted fair value gap, right? And then you want to see a change in state of delivery. I took my trade right at this change in state because I saw on the 1 minute we were pushing really fast, and on the 30 and 15 second we were also pushing very fast. And on the 30 second we had already inverted a fair value gap and got a change in state. So what I did was I waited for us to come up here to this 1 minute change of state to take my entry to see if we could close above or not. But I saw that we started getting volume really fast, so I just entered right here, right? Because I had high confidence that this trade wouldn't come back down here, right? So what I do after I enter my trade is I wait for my TP to be hit. And as you can see, today was a very beautiful trading day, a very easy trading day, right? We just had to be patient and trust our model today. And as you can see, we came right here, right? And our external draw is all-time highs, right? So this was our end of day draw on liquidity up here, and we can come down here 5 minute. Let's go to 5 minute, and you can see that we hit this all-time high again, our end of day liquidity area, pretty fast. And I mean, yeah, right there. So we could have held the all-time highs if we wanted to, but no need to be greedy. But yeah, so again, this trade, you want to have a good draw. I mean, for this model, you want to have a very strong draw on liquidity, right? So let's go over some more examples for you guys. Again, that was a trade I took today, and today I literally called out in the market. Like, I called out everything today. Like, I knew, like, I sent it out at 8:53, I think, in the charting channel. I sent out exactly where I wanted price to go. That's what I thought was going to happen, and it played out to a T. So if you guys aren't in the Discord, you're honestly missing out. But so now I'm gonna go over some examples that I'm gonna pick out from the chart. So I'm just gonna go from the daily and just go to a random spot in the chart. So let's go. Let's just go. Whoop, skip right there. Cool. So what day is this? This is a Wednesday, right? So from the daily time frame, what am I seeing? I'm seeing that we're at all-time highs from what it looks like. I can't really tell because data is fucked up back here. But it looks like we're at all-time highs. And it also looks like we just swept liquidity right here. So that tells me that we could deliver to down here, right? Why does it tell me that? Well, because when I see a liquidity sweep like this, especially when we're at all-time highs and we don't close above this high, right? I then assume that we have to come down to this most previous low, which is right here, right? So I would expect us to come down here, if not at least to here, right? So this is what I would expect us to have on a daily time frame, right? But also I also want to be checking, where are we delivering from? So from down here, it looks like we're delivering from a daily bullish fair value gap, and also right here it looks like we tagged into a daily bullish fair value gap. So I would say that we are pretty bullish. So let me drop to the 4-hour now. And we'll mark this out right there. And we'll mark this range out that we're in. So if I'm bullish, right, on the 4-hour, see, I don't know if I can do this far back because these new contracts that we're in. But fuck it, we're just gonna wing it. So on the 4 hour, what I'm seeing is, well, not really much because I can't really see shit. But I see that we have 4 hour gaps down here. We have a 4 hour gap down here. So let me mark that out for you guys. And let me get ES caught up. Alright. Four-hour gap is right there, right here on ES. Right. So if we're at all-time highs again, you want to remember you want to stay bullish, right? So with that being said, I want to be looking for bullish setups. So let's drop down to the 1 hour. Where are we at in time? Let's fast forward price. Alright, well, it looks like I'm gonna have to skip this one. So, what I would do is I'm gonna go to the old contracts from September and replay price back here with those, because we'll be able to see better and price won't be choppy. It's the same place where I was. Yeah, alright, cool, bet. So I'm on the same area. Let's just start back from the top. Well, let's just start here now since we're here right now. So, daily time frame. What do I see? We have a high here and we have a low here. So we are inside of this range right now, right? Mind you, we are also trading at all-time highs. So, with that being in mind, let's go to the 4 hour. Three, four, five, six. Oh wait, I am tripping. Alright, cool. Alright, now we're caught up. So, on the 4 hour, what do we see on the 4 hour? Not really a whole lot of anything, right? All we can really see is that we're just kind of consolidating, not really knowing where we want to go, right? But what I do see is a 4 hour gap down here, right? And why do I like this 4 hour gap? Because this 4 hour gap aligns with our daily range, right? So if we come down and leave these at the top and we just come down and take these lows, I can then expect us to have a strong reaction out of this 4 hour gap to the upside. So that is why I mark out these gaps. And I want to come and do the same on ES, mark out every single gap that is the same. Alright. 4 hour gap. And then I want to drop down to the 1 hour time frame. Alright. And now, what do I want to look for? Well, first, what do I see? I see all of this liquidity down here lying, just waiting to get taken, right? So, me seeing this, I would play heavy into the shorts. I would want shorts heavy right now, right? If you hear any crying in the background, I'm sorry, that's my daughter. She just woke up. She's starting to cry. But, so me seeing this, I want to see price come down to at least one of these levels down here before I take a long, right? But I still want to mark out every probable idea, every idea that makes sense to me. So we have a 1 hour fair value gap here that price could then reverse from, right? And then we have a big ass 1 hour and 15-minute gap down here. I don't need to mark out yet. So let me play price forward. 6, 7, 8, 9. Okay, so we're still in this range. We haven't taken this high yet or this low. So we're still being patient. We're still waiting. Didn't mean to do that on the 1 hour. All right. So now we want to come down to the 15-minute time frame. And we do the same thing that we did on every other time frame, right? We come down and we mark out our 15-minute fair value gap. So let me just mark this out. 15-minute bullish fair value gap. Right? So once we have that marked out, you can delete the other fair value gaps that you have marked out that are layered if you want to. That's just something I like to do so it's not so cluttered. Because now I have my lowest time frame mapped out already. So now what do I want to do? Make sure there's no other gaps down here. No, not seeing any. Okay. So me not seeing any gaps down here in this range would tell me that either price is going to trade past these lows down to a range down here, or we're going to reverse from up here. So now what I can do is I can just drop down to the 1 minute time frame, and I can just wait for my setup to show. So we swept liquidity, right? We wait for us to tag into this gap. You always want to wait for a fair value gap tag, right? So now we want to start to look for SMT, right? So let's see. I think we have big SMT right now. Yeah, so we have really big SMT. We have SMT right here. So that's the first step that we need. That's the first thing we want to see before we enter our trade, right? So we have our high time frame SMT. We want to drop down to the 1 minute now. And we wait to see our setup. What is our setup again? We want to see a 1 minute inverted fair value gap now. Right? Down here. And we want to see a 1 minute change in state. So now once we see these, we can enter our trade. And before we get our entry signal, we want to just see what the RR is looking like. So that's 30 right there. Let's play price forward. Okay. So right here, we get our change in state level, as you can see. So what do I do at that level? I buy. Why am I buying so confidently there? One, because I trust my model. This model has probably made me, I want to say around 11,000 last month, right? So I know to trust my model now. There's no doubt that once I see everything I want to see in the market, there's no doubt that I'm going to take this trade. Even if the trade doesn't play out, I still have high confidence. Why? Because the model has proven to me that it works. Right? So, have my order in. I'm in the trade now. And now we'll just play price forward. And also, what I want to do is mark out a 1-to-1. So, I do this sometimes with my trades. It's good to mark out your 1-to-1 and go break even or like take profits out of 1-to-1. That way, if price just decides to reverse out of nowhere on you, you still have your profits secured, or you're still keeping your capital safe by going break even. You know what I mean? So it's always good to mark out your 1-to-1 just to see what price does around there. And we're gonna just take this trade, see what it does. All right, cool. So we got stopped out by literally, well, I shouldn't got, if I would have had my stop loss correct, I wouldn't have got stopped out probably. That's why it's so important to have your stop loss at the SMT. So let me, now what I'm doing, I'm just gonna wait for another entry signal, right? Which is gonna be right here. because inverse fair value gap and a change in state of delivery. So once I get this, I'll take my entry. Let me sit here and wait. Didn't get it yet. There. So what can we do now? We can buy in again. I'm going to buy there. Stop at this right here. Target a 2RR. Right here. And we're going to play our trade out. Targeting a 2RR. Play price forward. So we would have been at break even now. But I probably would have put my stop here, for being honest. And we just want to wait for price to give us what it wants to do. Right? And as you can see, price delivered right to our take profit. Now you might be asking, why did I put my stop at this low, right, and not break even? Well, one thing I've noticed with my trading is that when I go break even, 9 times out of 10 I get stopped out of my trades, right? So what I've started to do is, if we have a low like this, that's like right under break even, that's not too much risk, I'll put my stop right here at this low. Because in theory, this should be a protected low and price shouldn't come down to this low if we're bullish, right? So as you can see, this my stop loss being at this low saved me from getting break even in this trade, and it hit full take profit, right? So now let's look at, why did this trade fail? Well, if you take your trade how you are supposed to and how I have been teaching you guys, your stop would have been at this low, right? And if you put your stop at this low, this first trade does not fail. But for me, I just have a tight risk. I have a 30-point risk, right? So obviously 30 points, it wasn't good enough for my trade. I needed more space, and I didn't give myself more space, and that's why I got stopped out. But this is still the exact same idea, the same exact trade. Just I didn't move my stop, so I got broken out here. So what I did was I waited for another sign to re-enter this trade, because we still have our liquidity area lying above right here and right here. So I'm still valid for longs until we get up here to this high, right? So I hope this video helped you guys on your trading. I hope this video, you guys understand this. Any questions you guys have, let me know. I will gladly answer any questions you guys have. And yeah, you guys want to join the Discord, link in the description. You guys know where to go. Any questions, I answer everything. I give out daily, my daily bias, daily P&Ls. I go live every Friday. So if you guys want to join that, feel free to.